The stock market is currently closed as of today, Sunday, May 3, 2026. Beyond Meat Inc., trading under the ticker symbol BYND on the nasdaq, finished its last active session on Friday, May 1, 2026, at a closing price of $0.95 USD. This represented an intraday decline of 3.6% during the primary trading session. Throughout that Friday, the stock saw a significant high of 1.10 USD and a low of 0.93 USD, demonstrating the intense volatility that has come to define this name recently. Even in the quiet of the weekend, the after-hours data continued to trickle in, showing a minor further slip of 0.63% to settle near 0.94 USD. For those watching the tape, the sheer volume on Friday was staggering, with over 113 million shares changing hands, which is a massive spike compared to typical trading activity and suggests a high degree of institutional shuffling and retail speculation ahead of major upcoming catalysts. Now, here is the insight that most people are completely missing while they focus on that sub-$1 price tag. While the general consensus is that Beyond Meat is essentially a penny stock fighting for its life, the options market is telling a different story entirely. There is a massive buildup of call option open interest at strikes well above the current price, implying that sophisticated traders are positioning for a potential short squeeze or a massive volatility event surrounding the May 6th earnings report. Everyone expects another round of disappointing revenue and widening losses, but the reality is that the short interest as a percentage of float has reached such extreme levels that even a neutral report, rather than a positive one, could trigger a violent upward move. The tension here isn't just about whether people are eating more plant-based burgers. It is about a technical imbalance in the market where the bears might have overextended their welcome. The common ground in the market right now is a feeling of exhaustion. If you look at the Apple stock or Nvidia stock charts, you see companies that define the current bull run, but Beyond Meat has become the poster child for the broken growth story. The general belief is that the plant-based meat fad has dried up and that the company is on a fast track to delisting or bankruptcy. It's an easy narrative to buy into when you see the stock trading under $1. However, I want to challenge that with a deeper look at their restructuring. The reality is that Beyond Meat has been aggressively slashing its operating expenses and narrowing its focus to high-margin retail products. While the market sees a dying brand, a contrarian view suggests we are seeing the painful birth of a much leaner, more sustainable business model that is no longer chasing growth at any cost. When we look at the recent daily swings, it's clear that BYND is no longer trading purely on fundamentals. It's trading on momentum and liquidity. If you are using platforms like Interactive Brokers or the Robinhood app, you've likely noticed the stock appearing on most active lists frequently this week. On April 30th, the stock actually surged over 20% in a single day before giving some of those gains back on May 1st. This kind of price action is typical of a stock that is being used as a battleground between retail diamond hands and institutional short sellers. The volume we saw on Friday, 113 million shares, is nearly triple the average volume, indicating that a lot of people are placing bets before the May 6th deadline. Institutional activity has been mixed, with some funds exiting their positions entirely, while others are using specialized Fidelity ETFs or individual brokerage accounts to hedge their bets against a sector-wide recovery. Comment below how many shares of Beyond Meat you currently hold, and if you are planning to sell before the earnings call. Macroeconomic pressures are also playing a huge role here that often goes ignored. We are in a high interest rate environment where zombie companies that don't produce consistent cash flow are being punished severely. Unlike a stable investment through Schwab Intelligent Portfolios or a diversified portfolio of Fidelity mutual funds, holding BYND right now is a high-stakes gamble on a specific corporate turnaround. The cost of debt for Beyond Meat is a looming shadow. They have significant convertible notes coming due, and in a market where credit is expensive, their ability to refinance is the ultimate reality that will eventually collide with the expectation of a recovery. If they can't show a clear path to being cash flow positive by the end of the year, all the short squeezes in the world won't save the long-term valuation. Let's step back and look at what the company actually does and how we got here. Beyond Meat was the pioneer of the plant-based protein movement, using a combination of pea protein, fats, and minerals to mimic the cellular structure of animal meat. Their business model relies on two main pillars: retail sales in grocery stores and food service partnerships with fast food giants. In the past, they had massive wins with partnerships like McDonald's and KFC, but many of those tests didn't translate into permanent nationwide menu items. The older reports from 2021 and 2022 showed revenue peaking at nearly 464 million USD, but by the end of 2025, that number had slid significantly. The reality is that the consumer's taste for premium-priced meat alternatives has waned as inflation pushed shoppers towards cheaper, traditional proteins like chicken or even store-brand plant-based options. If you're looking for investment help or trying to navigate self-investing on a platform like SoFi Invest, you have to separate the product from the stock. The product still has a loyal following and a massive retail footprint, recently expanding to over 2,000 Kroger stores with their new chicken pieces. But the stock suffers because the margins have been historically thin. When you invest online, especially in volatile tickers, you're looking for a catalyst. The future outlook for Beyond Meat hinges almost entirely on two things: their ability to raise prices without losing more customers, and the potential for a government-level catalyst. There have been whispers about the US Army looking into meatless protein for field rations, which would be a massive, stable contract that could change the revenue floor for the company. Looking ahead, we have two possible scenarios for the coming months. In the first scenario, the reality of the May 6th earnings report shows that revenue is still declining faster than expenses can be cut, leading to a further slide towards the 50-cent mark. This would likely trigger more warnings from investing sites about potential delisting from the NASDAQ. In the second scenario, the company surprises the market with a smaller-than-expected loss and a positive outlook on their new BYND IV platform, which uses avocado oil to improve the health profile of their products. If this happens, the extreme short interest could act like fuel on a fire, sending the stock back towards 2 USD or 3 USD in a matter of days. This is the tension that keeps traders glued to the Fidelity trading platform or the Robinhood stock trading interface late into the night. The risk profile here is immense. Unlike buying Tesla stock or Nvidia stock, which are backed by massive earnings and industry dominance, Beyond Meat is a speculative play. It requires a belief that the plant-based category isn't dead, but simply resetting. For those using a SoFi robo-advisor or a conservative Fidelity wealth management strategy, BYND probably doesn't even show up on the radar. But for the active trader using Interactive Brokers platform to capture small price gaps, the volatility is the entire point. The expectation is that BYND is a goner. The reality might be that it's just one good news cycle away from a massive technical recovery. To wrap this up, we have to return to the central conflict: expectation versus reality. The market expects Beyond Meat to fail because the historical data and the current price action under $1 suggest a terminal decline. However, the reality of the massive volume, the shifting business model towards higher margin products, and the sheer number of people betting against it creates a unique environment for a potential dead cat bounce or a legitimate turnaround. Whether you are managing your own individual brokerage account or looking for the best ETFs to weather the storm, Beyond Meat remains one of the most polarizing names in the market. It is a stock that forces you to choose between the narrative of a fad that ended and the potential of a company that is finally learning how to operate efficiently. The next few weeks will provide the definitive answer to that question, and the May 6th data will be the first major piece of that puzzle. Expect the unexpected, because in this sector, the gap between what people think they know and what is actually happening on the balance sheet is wider than ever. Maintaining a disciplined approach is the only way to survive these daily swings, and as always, the tape doesn't lie, even when the narrative tries to. Keep a close eye on those volume Mars and the institutional movement through your Fidelity mobile app, because the real story is often hidden in the trades that happen right before the bell. Reality hasn't fully caught up to the expectations yet, but the collision is coming, and it will be fast. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.